Yo, what up, Star Trek? Today is February 25th, and today I made $280 just trading SPY options. I'm going to show you how. So the first 30 minutes of the market, I make sure just to not do anything. The reason why is that it just chops up and down, and you don't want to get caught up in that because that's how you lose money. Now, you may be asking yourself, wow, you sit on your hands for 30 minutes. Surely you're going to make a trade right after this. Well, let me tell you something. It pays to be patient. And that's what we did here. So we have our level of our pre-market high at 431. We get the retest at 10 minutes at the market open. Then we get another retest around 10:38, a whole hour into the market. Now we do get our break, which is awesome. Because what does that tell me? That tells me that the stock is going to go that direction. So, first of all, you be patient. Wait for your entry. You just don't get in at this green candle. And that's what we did. We get our retest. We love this bounce off this 9 EMA here. You see this long wick? That means there's a lot of buyers. And that's the reason why I have this 9 EMA here. Because typically SPY loves to respect the 9 EMA on the 5-minute. So I get my entry at the close of this candle. Now, I would love to get something below it, but sometimes it doesn't work like that, and that's fine. I got my entry here. It immediately pops. And I would have continued to add too if it had dipped a little bit, but it immediately pops. I made a solid 15%. Easy money. Moving on, I got this large pop here, and then a large pop here. These are some, we call these Shreks, these are some large green candles, right? And then I get this, no. So we get these large green candles here, and then we get this doji, right? Now, this could be a sign of a reversal of things going south. But before you jump to conclusions, you should look at the volume. As you can see, the volume is very low, which tells me that this pullback is not going to last as soon as the volume comes back. So I take my entry here at this next red candle, and this is one of those scenarios where you want to keep money so you can average down, and that's what I did. Average down all the way to the 9 EMA, because unlike our first trade where we got the immediate pop, this one did not. So like I said, I continue to average down up to the 9 EMA. Now you should ask yourself, when would be a good idea to not average down anymore and just accept your loss? Here's the answer. If it closes below your levels, so in my scenario, the way I trade, if it closes below my 9 EMA, for instance, if this one was red and it closed below the 9 EMA, or even if it closed below the previous high, then that tells me that a reversal is coming and the trade is just a fail. And that's fine. You just take your losses and you move on, wait for the next setup. Fortunately, that did not happen. Averaging down paid off, and I was able to bank on this trade, exiting at the top of this green candle for a good 15%er. That was it for me today. I decided not to trade anymore, but there's definitely opportunities along the way. You have these with a large wick at the bottom, and then the touch of the 9 EMA you saw bounce it again. The reason why I didn't take this trade is because I already hit my goal. Like I said, the less is better sometimes, and you don't want to give back money in this market, especially with all the catalysts going with the war and with inflation and interest rates. Sometimes it's good just to sit on the sidelines after you make your bread. That's it for me. Everyone take care. I see y'all next time I upload a video. Hopefully Monday. Let's see. Take care.